Welcome back, day traders. Let's analyze the results of the middle of the trading week based on a fresh review of the US market. You are watching the red-hot review of the main events on Wall Street. Tuesday did not seem to be a good day for the risk assets, yet they closed the session with gains. Purchases of tech stocks and a buzz around the energy market helped key indexes to stay afloat. A new day comes with new risks and mixed trading.
After a very volatile session on Tuesday, major US stock indexes closed the day in a positive territory. The Dow Jones added 0.8%, the Nasdaq rose by 0.94%, while the broad-based S&P index advanced by 0.95% to trade at 4,165. Today's pre-market trading indicates that top performers may end up in the red zone. Stock indexes are depreciating by about 0.1–0.5% without any clear trend. So today the S&P is likely to stay in the range of 4,068 and 4,200 points. US stock indexes rose on Tuesday evening, making the second session of growth as the tech and energy companies surged. Such energy companies as APA Corp, Valerie Energy, ExxonMobil and ConocoPhillips gained between 4 to 5%, and the energy sector of the S&P jumped by 3.1%, having reached its highest level since 2014. Apple shares gained 1.8% and Microsoft stock added 1.4%. In the retail sector, the results were less optimistic. Thus, the shares of Target dropped by 2.31%, dragging down Amazon and Walmart stocks with them. US stock futures are slowly declining while shares of the energy companies continue to grow. The overall background for risk assets remains negative. The World Bank predicts that the global economy will slide into recession and lowered its outlook for economic growth to 2.9% for 2022. Earlier, it predicted growth of 4.1%. As for the commodity market, analysts at the Goldman Sachs see oil prices rising to $140 per barrel this summer due to declining crude production in Russia and gradual demand recovery in China. Credit Suisse warned on a Wednesday of a likely second quarter loss as volatility hit its investment bank for the third quarter in a row. Meanwhile, the ECB will announce its decision on the interest rate on Thursday, while on Friday the US will publish the data on retail sales. Until then, markets will stay nervous. Meanwhile, the US dollar index is firm above the mark of 102 points. Today, it trades near 102.40. Overall, USDX shows a slow but steady growth and is expected to move in the range between 101.90 and 102.80 intraday. The greenback is getting stronger ahead of the FOMC meeting next week, and today traders are mainly focused on the Japanese yen and the euro, while the dollar is firm. High inflation in the US provides additional support for USDX. Treasury Secretary Janet Yellen told senators on Tuesday that she expected inflation to remain high and the Biden administration would likely increase the 4.7% inflation forecast for this year in its budget proposal. Consumer inflation has been above 8% in recent months, the highest level in 40 years, and above the Biden administration's forecast for the fiscal year 2023 budget. Meanwhile, the World Bank warns of stagflation risks and a protracted period of elevated inflation. In this light, risk appetite is increasing. The USD CAD pair trades mixed today. The quote is hovering around 1.2530, rising and falling alternately. The quote is expected to move in the range between 1.2480 and 1.2610 today. Solid support for the loonie comes from the hawkish Bank of Canada, and crude prices are also driving the currency up. After a brief pullback from $120 a barrel, oil prices are again on the rise. WTI climbed to $120.40 a barrel and Brent advanced to $121.51 a barrel. Volatility in the crypto market increased on Tuesday. BTC momentarily fell to $29,480 and then rose about $30,000. The flagship cryptocurrency currently trades above 30,520 and may attempt to grow further. At the same time, the asset is still hovering within the limits of the wide corridor between 28,000 and 32,200. Today, digital gold may fluctuate in the 29,200 and $30,900 range.
It has been our review of a trading day on Wall Street. Currently, the pre-market does not make any clear signals. Meanwhile, the previous few trading days were turbulent and high volatile in the stock market. Have a nice trading day and see you tomorrow.